Good afternoon. Good afternoon. Good afternoon. This is your host. Just want to make this Quasimodo has become an issue of significance. If you are trading patterns, yeah, fantastic, very, very, very highly probable. Yeah. Quasimodo. Yeah. You will see that Malaysian people, I wonder why they use it as an entry confirmation. They use it as one of the entry confirmations. Yeah. Even this guy, Rifty or Chemist and the rest of them, you see, they presented it to us, especially in trendline. You see it in trendline, very powerful. But some people still don't know they still don't understand the pattern, how the pattern is for, the pattern formation, then what in the checklist, what are the things you need to put in place to raise the odds of probability. What are you need to check out for? Yeah. So according to history, Quasimodo is derived from a French language. It's come from the name of the character in 15th century novel, The Hunchback of Notre Dame. The original French is a kind of a film. Yeah, made in Paris, written by a French writer named Victor Hugo. I think it's a philosopher. It's a French philosopher. The story is a novel about the victorious love story of Quasimodo. The backdrop is the sacred injection. So originally, Quasimodo is a hunchbacked man with two uneven shoulders. That means one high and one low. So they are uneven. That's why I said the other time that it's different from the regular, the famous head and shoulder pattern. There's a difference. Quasimodo's irregular shape is the origin of the Quasimodo pattern used in financial market structure. Yeah. So this is how to recognize the pattern. Stay along with me. This is how to recognize the pattern. It's a price action based, blah 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 blah. It can be used in all. It's a price action based. There's no indicator involved in this. I don't know if you are going to use your own indicator, but here, throughout this course, I'm not going to use indicator, a single indicator. Yeah. So if you use it, if it goes well with you, but I'm not the one that use it. Yeah. So you see a price. This is just let's go to the trading view. Yeah. This is it. If for buying market, we want to see market coming in a downtrend. In a downtrend like this, lower low, lower high, lower low. This is the lowest low level. You know, Quasimodo, we say Quasimodo can be used, is ultimately used for picking a reversal in a trend. Yeah, it's good in picking a reversal in a particular trend. So now this is the first cycle of it, divided into two cycles. We have the bearish cycles, then the bullish cycle that reverses the trend. So the first cycle prices in a downtrend, making lower low, lower high, lower low, lower high. Lower low, lower high. Then we have a lower low here, or a particular low. And this is the lowest. This is the lowest low. A lower low. This is lower than the previous low. That means it breaks a structure. It breaks a structure. We must break this structure. This structural low is broken. So we know price will move back inside. So now this is where the rallies comes in. After breaking the structure, price rallies, a short rally upward, then the rally must take out this high, the most recent high. Price must take the rally, the price rally must take it out. That's the confirmation. It must take it out, then close above it. It must close above it. It must close above it. Not just a ordinary sweep. It must close above it. Then it pull back. Notice another break of structure, right? It pulls back into the same level of the previous low. It pulls back to nearly want to meet this lower low, but at last it ended up being at this level, then bounces higher to start the new phase of a very bullish cycle, right? So this is the bearish cycle, this is the bullish cycle, right? Let me do like this. Bearish cycle. Then we have this as what? We have the other side as bullish cycle. Yeah, bearish cycle. So this form the valley. This is the lowest low. Call it the valley, because from the valley, the price rally upward, come back to this place. This is what in SMC, Smart Money Concept, or ICT, my AMD course, this is what we call the chalk, right? Once this place is confirmed, this place cannot go down below the level of the lower low. So once this place is confirmed as a pull, just a pullback, not a continuation of the previous downtrend. Once this place is confirmed, it ended here. So that means that makes it to be what? To be a Quasimodo. What you call Quasimodo. So this is Quasimodo. QML level. Yeah. So that's how it is. That's for buy, likely to buy here. So somebody's going to buy here, put your stop loss below here, then you buy here. So whenever the stop loss, if the stop loss takes you out, moves below, price moves below here, that means it invalidates the pattern. You are trading under probability, so you don't need to be afraid of that. Just invalidate this thing. So once this thing break through the upper, this new higher high, so that means we just move the stop loss, move the stop loss, move the stop loss above that level. I mean, this is a gift for you for the new month. It's a gift. So you target the next high, previous high. Yeah, could be around here or thereabouts, or you can do 1:4. I think it's 1:4. All right. So once the price moves to break your DC, probably it breaks your. Once you get to 4 or 3 times 3 of your risk, then you can take to break-even point. To break-even point. But you must stay. But I advise you scale out some positions in order to minimize your DC and maximize your gain. Yeah. So you look back for the price to pull back, because once price break this structure, possibly to pull back again, then you re-enter. You see your re-entry pattern. So that is for sell, right? For sell. That is Quasimodo. We never talk about mSnR. Let's talk about how the original how the pattern is formed. Then we now talk about how the Malaysian use it to trade. use it to confirm an entry level. Then for sell pattern, we have this price. We want to see market moving in a bullish structure. This is the higher high, higher low, then a higher high, then price descend down, declines to take out this, to take out this low. This low takes out this low. So that's a proof of what? A proof of change. Try to change the reversal. It's signaling reversal. So then it pulls back. In an attempt to break this, it could not break through it. So it ended up, it ends up in this range of the previous high. That range of it ended up in that range, previous high. So this become QML level for sell. So you sell right there. Sell right there. Sell right there. This is higher side. So this becomes the center is the peak, right? It must go higher than this angle and the other angle. It must go higher than. So we call this the higher high. Higher high. Then we have this as what? We have this as the previous high that was broken. I was taking out previous high. Then this is the low of it. I was taking out also. So this is why this thing is so significant, because as long as it breaks a structure, makes to be a perfect, a good high probability setup. Yeah. Because as long as it breaks, like for example here now, it breaks structure, it went up to break another one, it came down. Then it could not go beyond this level, ended up in the middle. The same thing happens here, right? It breaks the structure, right? This is a strong low that takes out this structural high. Then from this higher high, price declines downward to take out this structural low. To take out the structural low, and as you take out this structural low, it closes below it. So we say it is a kind of imminent change. It's a signal of a change. But we're not yet we are going to confirm here. If price takes out this level, if price take out the highest the higher high, that means it's invalidated. It's invalidated. Yeah. So, but if it ended up, maybe it could be here, it could be here, it could be, it depends. It depends. If it ended up being like this, that means and started coming down, it starts to come down. That is Quasimodo. That's Quasimodo. And there's a difference between Quasimodo and head and shoulder pattern. Don't mistake them for one or the other. This is head and shoulder pattern. This is head and shoulder pattern. This is the neckline. The price pull back into this is the head, this is that. So that means the head and shoulder pattern angle must be symmetrical. If you are trading head and shoulder pattern, the angle has to be symmetrical. Symmetrical in the sense that the distance from this first shoulder to this place and here and to this place must be equal. They are symmetrical, they look alike. But on Quasimodo, it doesn't have to look to be equal. It doesn't have to be equal. This could go as far as this distance away from the peak. Could go as far as this. You see it when we get into the trade chart. See it. We go as far as this. Still Quasimodo. And it could go, this level could go down something like this, but it will now go up. So that's Quasimodo. So we have different range, come in different range, in different variety, right? So that is a Quasimodo. Then Another thing we're going to look at again is that another range, another pattern of it is that you could have this structure for buy. You can have this structure in a higher time frame. In a higher time frame, when you get let me turn to the manual because of time. Let me go to the back to the manual. So if you get a gap level at higher time frame, it's not over. Don't overlook at it. Don't ignore it. Don't ignore it. Please don't ignore it. Something like this. Yeah. If you get something like this, you see something like this in a higher time frame, hidden base like this, after the breaking of this the high, if you got this towards the highest high, you know, this guy, the Malaysian traders, they call it decision levels, or where the RFT call it decision level, and the rest of them. That when you get it closer to or approaching or at an SNR level, SNR level, don't ignore it. That means a reversal is coming. A reversal is coming. That signals a reversal. So if you take it lower, you will see it in this form. Hidden base will be clearly surface, cross surface to surface. The price take out long as price takes out this base and close below it to become what? A new lower low. Then we look for price to push higher, to pull back into this level. So you can see it in a different pattern. So if you don't look closely enough, you will think it is not a Quasimodo. Yeah, if you don't look closely enough. But whenever you signal this, if you signal this, you see a structure going up, it broke a structure, then you see a gap level or a hidden base that is approaching another high. And price, even before price come down at all, check it in a lower time frame. I will show you, and we'll go to an example. We'll show you this in examples. Check it in it. So we have different level of this. So yeah, this is, you can imagine this. See this. After the breakout of this, it shows, it shows a gap, a hidden base. This is daily chart. So when I take it to a lower time frame of 4 hours, this is what it gave. And you see that this is the base. This is the base. This is the base. So we look for price. This is not a breaker. Price pulls back into the upper grade, and with SNR, then it starts coming down. You will see it when we go to. Let me check. Very good. Yeah, this is it. This is it. Can you see that? See it? This is Quasimodo. This is that pattern. But in a daily, you may not be able to take note of it because it does not give a base. Because it does not give a base, you think it's not a Quasimodo. So that is why you need to pay attention to details in your charting. You need to pay attention to details. So when further you take it down to lower time frame, you can imagine this thing you will have missed there. See it almost about 2,383. From here, you see this here, see the gap breakout. We think it's not a Quasimodo. Yeah, it still went on daily chart to give us this. Yeah, so you take note of that. Take note of this is for buy. If you see a gap level around here, this area, if you refine it lower, you must get this. You must get it. So price will take out the base, then return back into it, the lower limit. Now, for that present a good buy, a good buy. Then, if you see an engulfing in a higher time frame, a trend line, this engulfing came down, like this, comes down like this. Then, if you refine possibly you will end up in Quasimodo. Will end up in Quasimodo. We'll see some examples in the chart. Yeah, so we have different way Quasimodo is being structured. If you don't look well enough in the higher time frame, you will miss the opportunity. You will miss it. So whenever you see this, please frame this pattern in your mind. Whenever you see all these patterns, always refine to a lower time frame. Switch over to a lower time frame. Could be 1 time frame lower or 2 time frame lower to see a perfect a perfect Quasimodo there. So that is Quasimodo for you. I've put up this in my manual, so I think I'm going to add it to. I'm going to add it to the trading, the SNR trading manual, trading the SNR the Malaysian way. Yeah, I'm going to as a bonus for them. Yeah, if you never subscribe to it, please right now subscribe to this. Subscribe to this. It's the content is loaded. It's full of values. It's not $20. $20 is not something that will make you to lose the valuable content of this package. Yeah, it's not something you must lose. So that's we now say the significant, because this is why I bring you this as a new month gift. We now talk about the significant. Well, how do the Malaysian traders integrate this into their, so that make it look more probable? How they use it? QML plus SNR. You see that you find out that at each level of pullback into the peak of value, you get an SNR. You get an SNR. Yeah. For example, this place now, this is Quasimodo. This is Quasimodo. This is Quasimodo. This is a daily time frame. This daily time frame. You see it? So price was coming from top. It could be like this. It doesn't matter that it has to be always the start must come from the bottom. No, it doesn't matter. So in this way now, they are going to use it as what? As a continuation pattern. Going to use it as a continuation pattern. So whenever you see the pattern in any form, whenever you see the pattern, like for example, this place now, this is another Quasimodo. This was coming from the previous a very strength. We have this as Quasimodo. Can you see this? Take out this flow round. So we have this. You can imagine here, we have a base here. We have a base here. It's a base. The base was taken out by Quasimodo, by this leg of this. There's another thing I want to tell you. The close. I'm not targeting the low. I'm targeting where the body closes in that base, where the body closes, because sometimes this could become so long. So frequent, most time it end up breaking the body line price. If you can imagine, if you are going to put your this here, your checklist here, you'll have missed out this because it doesn't close below this, but it closes below the SNR of that base. Yeah. So that's my own checklist. Yeah. So I won't miss many opportunities possible to center by possible. Like for example, you can see this now. There's not close below here, but close below the body, the SNR, this place, close below it. So as price pull back into this is an SNR. Then we have this as an SNR. This is why these people integrate this into their this to confirm an entry point, an entry level. So whatever price pull back into that place, they set up the this is immediately. Set up the this thing. Stop loss, target, first target to be here, be here, be here, according to your own profit objective. Then you can imagine what comes that finally went up, but they must have taken a good, solid, solid, good one. 1,216 or thereabouts. 1,216. Can imagine that. So it's very powerful. That is, they use mostly use it as an entry confirmation. It's an entry confirmation. This is the entry. Price pullback breaks out of this. Breaks it out and pull back into the DC to make this the DC complete, the leg of Quasimodo complete. That's for buy. So that is what why one of the signals they incorporate it into SNR level. Yeah, what this purpose, serving the purpose of the purpose of entry confirmation. Yeah. So you can, we have three ways you can enter your position. You can enter by using your what? You can enter by using your engulfing. You can enter by using your SNR price pullback at a lower time for a breakout. You can enter by what? You can still enter by using Quasimodo when price pullback, try to pull back to the apex, and see an SNR got rejected. That's where you strike your deal for sell or buy. So that is for that is for DC. Then we talk about other patterns of that I want to show you. You see here. You can imagine here we have this. We have this. See here now. See here. You can imagine this is a gap, right? This is a gap. If you take it lower, what do you get? You get see it, see the base, see the base. See the base. This is the base that was formed out of that daily gap level. Yeah, and price come back to test it, the upper level, and with this, you can imagine the huge this in there. You have taken first, but it's for a if you are very aggressive enough, yeah, you have taken much this in there. Price breakthrough this, came back, breakthrough this, the base, that's a gap, the base, this is the base of that gap. And finally, we have this lower low be taken out. Be taken out. Sorry, higher low be taken out. And then price pull back again. So this and then you use your, there must be an SNR. There must be an SNR there. That the price is going to get rejected out. There must be an SNR. That's the SNR. Then you put up yourself, you're selling downward. Take note, please. Take note. Take note. Then another thing we want to see is significant out of this thing is that at every point in time, the peak or the valley, which is this the pattern. in the pattern, if you check very well in the pattern, the valley, which is here for buy, the valley is usually an engulfing. Why is it an engulfing? Because as long as it takes out the previous pattern structural high and low. This is the previous structural high, then the structural low, right? And price came down, broke through this, then went up to that, means it engulfs this and this. It engulfs this. So that is a probability, a very high probability that price is going to pull back to this. You know, whenever you have an engulfing, there's a high probability that price will test it. That price will test it, which happened here. This is an engulfing. This is an engulfing. This is an engulfing, which was tested by price. Here, so it's tested. Then if you take it further, the second one is this. This is the second engulfing. This is the second engulfing. This is the second engulfing. In my mind now, I told you about different varieties of engulfing patterns. So that's a patterns come back into it. So that is that's why you're going to see the significance in this. Once you get an engulfing that forms the middle peak, which is the highest high for sell, or the lowest low in the pattern. If you want to get the engulfing, I'm very sure for you, very sure for you that it's going to pull back. Price is going to pull back. Price is going to pull back. You see a lot of examples in my DC because of our time. Because I want to make this video to be very short. You see a lot of examples. Yeah. You can imagine this. See this. This is engulfing, an engulfing. This is Quasimodo, right? Quasimodo. This is the SNR of it. And price pull back into the SNR. Pull back into the SNR. So you will have stopped your order here. Then you have your stop loss. This is an engulfing. There's an engulfing here. See it. This is an engulfing here. That's an engulfing there. See it? This is an engulfing here. The price tap into. So you have that. Then we have this again. See it? This is a Quasimodo. That's why I told you it's not the same thing as head and shoulder. This cannot be a head and shoulder pattern. Please take note. You can see the distance between this peak and the other angle of high. So this is an engulfing. And you see this is engulfing. From here to this place engulfs this base and price pull back into it. Then we have another one here. See it? This is an engulfing. It's an engulfing. Price pull back into it. As long as this place does not go higher than this. Yeah, must not go higher than this. Or else it is invalidated. It's an invalid QM. So price pull back into it. It's an engulfing. Then you see many examples that we did. Yeah, there's another one. Yeah, that previous one. Then what test? Yeah. It's an engulfing. It's an engulfing. And see, we got an engulfing that take out gap, the daily gap. Take out the daily gap level. There is a breakout with engulfing, forming the peak of the pattern. Then, so we have the confidence that price will be likely able to pull back into it. The price finally pull back from the setup. Yeah, price pull back into it. I see the massive sell. But this is a daily setup. See the massive 2,383 pips. Just small trade. Just small trade. So whenever you see that this is an engulfing, price will go back to it. This is an engulfing, price will come down to it. So that gives you. I'm just telling you what I teach my VIP students. As a new month gift, I'm giving this as a new month gift. Because even this guy, the Malaysians, not expose all this thing I'm teaching you here. I'm showing you here, brother. They not expose it like that to that level. Yeah. I've got all the materials of the top Malaysian traders we have out there. They never exposed to this level. Where exposed is it's an advantage for you. Yeah, it's an advantage. So if you go to other significance, we were talking about, yeah, that if this thing intersect with an SNR, we've talked about that. If it intersects with an SNR, it gives you a high probability. Then you sell or buy at the rejection of that SNR. Then you say it usually carries an engulfing pattern. When the QML service at mSnR, it's usually making up 20 points in price movement. When properly used with trend lines. If you come in conjunction with trend line, if you go to my manual, I do a lot of examples, a lot of trade examples in that manual. QML is best applied in lower time frame breakout for a sleeper entry, which I've showed to you. Then, especially when price intersects. So that's significant. The significance of, I've shown you the engulfing. Yeah, when QML pattern carries an engulfing, then if it intersects with an SNR as it's pulling back, intersect with an SNR, then trend line. Talk about trend line. Yeah, I told you about the gap level. Take note of that. When you see a gap, either 4 hours or daily, that is approaching particular level, check very well. That gap must have a base that is hidden in higher time frame. The price, like when you get that hidden base and price put back to it, that forms your for example, this is a gap, right? This is a gap. Then the one we are talking about, if it comes, if another point, I think I'm trying to expose you to so many things here. Yeah, so many things here. If it comes, if the pattern was upheld by an SNR level, you can see this. This is the previous SNR level. Then we have this thing above it. If it comes below it, it gives you good selling point. Below it, give you good selling point. And you see this? This is it. It's either a SNR or a zone, a particular zone. You come at a particular zone, right? So it gives you another good conflicts. Yeah. Give you a good conflict. Yeah, you can imagine this place has a good, it has a, yeah, we have a zone here. See this zone? This is the zone, right? This is zone. And this thing comes below it. You can see this thing here. Our SNR. SNR level. Then good. This is zone, right? This is zone, an engulfing zone. So if you have the knowledge of SMC, you understand what I'm saying here. It's an inducement or thereabout, but let's not confuse many people about that. So this is a zone, and the pattern forms below the zone. This is the left angle, left shoulder, or the left shoulder or left angle. Then we have the peak here. The peak here. Then this is the base. This is the first base. Maybe probably if we do this to 4 hours, let's see if it gives us. Wow. You can see the base. 4 hours. Base. See it? This was taken out. The base. And if it comes, that 4 hour base comes below the daily hidden base. And price break through it. Go back to this is, can you see that this is a QML? This is QML. So you must have set up your this. And because we are if you need not, if we have not refined to this level, we will have taken advantage of this. You can imagine in the first position, you can quickly target here. This is 4. Quickly target 4 to scale out of your this, your profit. You can imagine. Then this is the high of it, the highest high. This is the left angle. This is the peak with engulfing. The breakthrough, the gap, the breakthrough with engulfing closes below the base in 4 hours. But the daily did not show us that very well. So you can see this is QML. QML. And price moves. Price move to hit your, and mind you, your this is hit here. Your times 4R reward is hit there, right? It's hit there. And you are still going to enter it, but it's still going to pull back to this place. It's going to pull back. It's going to pull back. Let's take it to daily. You can imagine just on that this in the low, in the higher time frame, we capture this thing. But if you did not refine very well, you will have seen this hidden base that is hidden in a daily time frame. You'll have seen that because we refine it. So you can imagine. You can imagine. See this? See the second cell soon. So huge. So huge. So huge. Almost about 1,330. 1,330. Then finally it got to the base, the zone. I mean, tap into the zone and probably maybe take out the zone. Take out the zone. Go back into it. So that is that. That's how to. So when you see it below this, when you see it below a zone, a particular zone, either a zone or an SNR, it carries an SNR. Don't pity it. Don't pity it. See it here too. Can you see this? See it here. See it here too. I told you this it's not like head and shoulder pattern that must be symmetrical, that the angle must be equal. No, it doesn't have to be equal. And see this is head and shoulder. This is a Quasimodo. Can you see that? This is the peak. This is the base. It was cut below. Then before that we have this as what? As gap. We have this. See the failed engulfing pattern here. And use this as your zone. It failed this. It failed this. we fail this. This is what the pattern I put in the manual, which is this pattern. If you scroll down, not to see this pattern. Well, yeah. See it. This pattern. See it. When you see a breakout, then you got a QML. At the breakout, after the breakout, price pullback to form a PML pattern, a QML pattern. That gives you a confidence that it's going to move downward. This is used for breakout. But if you see it here in a higher time frame, if you find it to lower time, this is what you get. That's why you should take note of those things. Engulfing. Take note. It's usually referred to a this thing. So when you see an engulfing pattern at a breakout of a support level or resistance level, take note, refine it. You usually go to end up in QML. So you can say it helps you to check the probability of the pattern. If you take it to a higher time frame, you show you the damage. Price is going to retest this engulfing, then comes down. Because it was a breakout. A broken support level. The other side that is for buy, a broken resistance, right? So let's go back to so you can imagine this thing you get. So we target here first. It can be at, and see below the zone. Below the zone. You see it's hit. It's hit. So your stop loss is not hit out. So that is that. Maybe when we look at that, we look at more on into this. So that's how you can also trade Quasimodo on its own. But when you combine it with SNR, Engulfing Trendline, it gives a very, very high probability trade setup. Yeah. You can trade it on its own. I've done that this thing on this thing. So you can get the complete manual when you subscribe to get the complete manual video. Yeah, get the complete. I do a lot of this in there. The manual. Guys are breaking records. I tell you, guys are breaking records. Guys are breaking records here in my Telegram group. See the subscribers, doing doing waves. See subscribers, they are doing marvelous works here. Marvelous works, yeah. Give me testimonies, breaking through, making monies, making monies. Guys are making money here in the group using the manual. So please don't be left out. Don't be left out. You're making money. Don't be left out. So just subscribe. Just subscribe. This is the manual packed with three patterns. Three patterns. Three patterns. Most about then I give a breakout trend line breakout as a bonus here. Give trend line breakout as a bonus. Therefore, this is for the curriculum. If you want to enroll for the the mentorship private one-on-one mentorship class is what you get. With one, we talk about the mSnR, then 2, with 3, 5, with 6. Talk about 3 patterns that you go to master, how to master the 3 patterns: SNR, mSnR, then engulfing, then trendline. Before we give you the bonus package, this is likely come back to this. Likely come back. I'll have more to show you. I have more to show you. Yeah. I have more to show you, guys. I have much to show you. So this is the how to subscribe for the manual. If you want to subscribe for the manual, these are the contents. Coming with about 23 special videos, 23 videos, right? 23 videos. Yeah. So then it comes with a bonus, the bonus of that trend line. So if you want to subscribe, just $20 only, just $20 as a giveaway pack. It's full of value. $20 is small thing where people are selling a course for 500 and above. This is just a package in a 3-in-1 package. 23. I've added about 2 more videos. I'm still adding more into it because we added to a discussion group. If you subscribe today, you will also be added to a discussion group where we share ideas, right? So see testimonies, then this is the subscriber group. Yeah, see the videos, chat actually about chat for refinement, how to refine your charts, how to refine your charts, how to refine your charts. So the video, just click on the, go to the this, then see, yeah, manual. Yeah, that the videos. That the videos. This is the manual 2.0, the new upgraded version. The upgraded version. That the videos. We got that the videos. Yeah, so we could do another second video to show you more of what we have